Welcome to the Capital News. I am your host, Alex Karitis. Today is Sunday, October 6, 2019. Thank you so much for joining me. I hope you all enjoyed your weekend. This is our segment for the week ahead, for the week of October 7th. Well, some things that we're going to discuss here briefly. We're going to do a quicker podcast here today. Just some topics that I do want to cover because I did not do a podcast on last Thursday or Friday. So there were some, the jobs report was out. I want to talk about the repo market, the Federal Reserve's intervention once again in the markets. We're going to discuss Hong Kong protests continue. We have the U.S.-China trade talks taking place this week. We have a potential second whistleblower now entering the foray. So this thing just keeps going and going and going. This is October, so at the end of the month we have to deal with Brexit and some other news that came over, some headlines. We have HP, Hewlett-Packard, with some massive layoffs underway. Also, HSBC, one of the world's largest banks, has also announced some major layoffs as well. But first, to the jobs report that came out last Friday. The market was expecting 145,000 for the month of September. Came in short at 136,000. However, the unemployment figure, the U3, the headline number, went from 3.7% down to 3.5%. 3.7 to 3.5, marking a multi-decade low, about 50 years ago, 3.5%. We also had a positive revision for the month of August. So they added 45,000 jobs for the month of August, which was a reversal of trend because the past 5 months showed downward revisions. Now, this is still somewhat perplexing to me. Sort of you have to ask the question, what's the quality of these jobs, or is it just a matter of quantity? Because obviously Donald Trump and company were out there patting themselves on the back that this is a multi-decade low, 3.5%, isn't it fantastic? African American, Hispanic, Asian American, all these people with historic lows, isn't everything great? Well, no, it isn't. And something doesn't smell right here, because what we've said on previous podcasts many times over is that report that was released from the Bureau of Labor Statistics indicating that they overcounted by 500,000 jobs. Overcounted. That means there's fewer jobs than what they reported. And not by 5,000, not by 50,000, by 500,000. And what happened to the unemployment rate? Nothing. Nothing happened. Nothing. It stayed there. And now it's going lower. Interesting, isn't it? How do you explain this? Another thing you have to take into consideration is the amount of Americans who are not in the labor force, which is nearing 100 million. You heard me correctly. Look it up if you don't believe me. It's on the Federal Reserve's own website. If you check us out with our video presentations on the Capital Economics, I cite Federal Reserve economic data all the time. You can go find it right there. Almost 100 million Americans not in the labor force. Okay? Yet we have 3.5% unemployment. Now, you also have to understand something, too, ladies and gentlemen, because this is something we also talk about here all the time, are the PMI numbers. Whether we talk about that number 50, right? Anything above 50 indicates expansion. Anything below 50 indicates contraction. Well, we're starting to see deeper and deeper contraction globally. But since we're focusing here on the United States, we're seeing a continued slowdown in manufacturing. In contraction. The rate of growth for services is continuing to slow down. Now, those are leading indicators. That's why we highlight them here. Unemployment, and this is important to stress, is a lagging indicator. This is basically the best or the worst lagging indicator, however you want to look at it. This tells you what has already happened. It is not going to tell you what is going to happen. But given the fact that we've seen a continued deterioration of these PMIs across both manufacturing and services, one would have anticipated that this would have been an even lower number. Now, if we're going to say that those are leading economic indicators, which they are, the PMIs, then one can reasonably assume that next month's numbers, and therefore, in going on, are going to come in weaker. That would be rational. How we have an upward revision of 45,000 for the month of August is perplexing to me, given those PMI numbers, which hold a lot of water. Believe me when I tell you. That's why we focus on them here. So to me, something is a little bit askew. But given the fact that unemployment is a lagging indicator, maybe that's the hang-up. But it's perplexing to say the least. So we're going to continue to monitor this. Last week there was a lot of jobs data that came out, not just from the jobs report, but also from the ADP, the private sector gauge of employment. You know, we report that here and we talk about it, but I don't like it. And I've stated that many times over. I don't like it. I just want to go with what the government gives us. I don't like and trust what the government gives us either, but that's the official number that is coming from government agencies, and that's what we're going to work with, period, stop. So 3.5%, this is perplexing to me, but that's the number. Now, this is a nice segue into the Federal Reserve. Two things we're going to talk about here in regards to the Federal Reserve. First is the repo market, the overnight lending. We said on multiple podcasts that something must be brewing underneath the surface if the Federal Reserve has to step into this market to maintain interest rates where it wants them to be. So basically, interest rates have a mind of their own, which we said was not only a possibility, but a probability. And that was something to be concerned about. Because this is the interest rate, these overnight rates that the Federal Reserve controls. So if it gets out of their control, then something must be amiss underneath the surface. And that's why we're paying so close attention to this. And back during their September meeting, in mid-September, this was the first time the Federal Reserve had to go back into the overnight lending facility since the onset of the Great Recession. And Jay Powell, at his press conference following the FOMC committee meeting, they said, well, you know, this is just sort of a one-off. It's contained. Everything's under control. This is the end of the quarter. Corporations have to pay taxes, so they're in need for cash. We have some U.S. treasuries that are expiring. They're rolling over. They're maturing. You know, this is just, you know, a handful of things coming together, this perfect storm, if you will, that we just haven't seen for a decade. Nothing to see here, folks. Pay no attention to the man behind the curtain. Well, nonsense. We called it nonsense from day one. But we said, you know what? We'll give them credit. For the sake of argument, we'll give them credit. We'll say, you know what? It is the end of the quarter. There are some treasuries that are coming due. They're maturing. Okay, we'll give them credit. But we're going to pay close attention to this, even though in the back of our minds, in the front of our minds, we know this is a bunch of BS. But let's, just for the sake of argument, we're going to give them credit. Benefit of the doubt. All right. Well, what happened very shortly after? Oh, yeah, you know what? My bad. It's really not contained. We're going to have to continue doing this until October 10th. Okay? We're going to have to continue to lend over $75 billion on a nightly basis. $75 billion. And there was more. Remember that word oversubscribed? That means there was more corporations out there that needed more than $75 billion in aggregate. Well, the Fed shut them off. We have a limit of $75 billion. That's it on an overnight basis. That's a huge number, folks, on an overnight basis. Any basis. Then they expanded that. Then they gave a shorter-term repo market as well. Now get this. October 10th ain't going to cut it. Now they're expanding it to November 4th. So this is just a one-off. It's contained. Nothing to see here. We got to continue doing this until October 10th, and we're going to expand it. It's not even October 10th, and we have to kick this down even further to November 4th. You smell a rat? Does this sound right to you? Even if you don't understand the mechanics of the overnight market, of the repo facility, you don't have to. You don't have to. Just ask yourself, how big is $75 billion on a nightly basis? Given to banks and financial institutions, you're never going to know. The only way we're going to find out who these banks are and any other type of financial company out there is when they go bankrupt, when they go bust. Oh, it's going to be like another Lehman-like event. Oh, those must have been the idiots who couldn't manage their money and they were in a tight fix. Here's the other scary thing. We have an incredible amount of U.S. treasuries that are actually coming due as well. So who's buying them? If they're going to be maturing, we got $23 trillion in debt. We don't have the money to pay them off. So they're going to have to roll them over. Who's going to buy them? Well, that leads us to our second point with the Federal Reserve. This is quantitative easing. Now, they're not admitting it, We talked, I think, about a week and a half ago, when we looked at the Federal Reserve's balance sheet, that it increased. It increased. This is quantitative easing. They're not admitting it. They're not talking about it. At that point, it was about maybe $80 billion. 80 billion. Now I think it's over 100 billion. Actually, I think what was the number I saw? 188 billion. I'll have to double check, but it's gone up. The balance sheet of the Federal Reserve has gone up by 188 billion dollars. That's the asset side. 188 billion dollars. Let's just put this into perspective for you, because we've had quantitative easing, and if you check out our video, that Capital Economics presentation on thecapitalnews.com or our YouTube channel, The Capital News, are central bankers trapped? And yes, they are. We showed you quantitative easing 1, quantitative easing 2, Operation Tryst, and QE3. And we've been saying here for quite some time, not if, but when the Federal Reserve comes in to quote-unquote rescue the day, if they're actually going to give the appearance that they are rescuing the system, they are going to make the aggregate of QE1, QE2, QE3 combined going to look like child's play. That's how big QE4 and beyond is going to have to be to give it the same type of punch, diminishing marginal returns. We talk about that here all the time. It's running out of juice, but this is all they know how to do because they're trapped. They're not going to come out and say, we messed up. This monetary experiment failed. They're not going to come out and do it. They're never going to admit the truth. They're going to dig in deeper, and in the process, they're going to screw us all over. This is what they do. So we're going to pay attention to this, but it's $188 billion in increase in their assets on their balance sheet. Again, perspective. When we went from quantitative easing to quantitative tightening, the Federal Reserve was pulling out about $50 billion per month. That's on the high end. $50 billion per month quantitative tightening. $50 billion. In the course of 3 weeks, the Federal Reserve's balance sheet has increased by almost $200 billion. It would have taken 4 months of quantitative tightening to do what the Federal Reserve just did in 3 weeks, but quantitative easing, throwing more liquidity out into the system. Something is wrong, folks. They wouldn't have to do this if everything was fine. If this was the best economy ever, wouldn't have to do it. But there's a lot of treasuries that are coming due. It needs to be rolled over. Somebody needs to buy them. Is China going to start buying them? No, they're actually cutting back on their treasuries. They're not going to do it. Are you going to do it? You trust Uncle Sam to pay you back? Do you have money? Most Americans live paycheck to paycheck. You give Uncle Sam 10 grand? Probably not. Probably not. So who's doing it? Well, Federal Reserve is. So we're going to have to pay attention to what they do at the end of this month. Because here's the other thing, folks. Their goal, their mandate is a dual mandate. Full employment and stable prices. Well, I was hooting and hollering when it was 3.7%. And I said, well, what are they going to do? That's their dual mandate. We have stable prices according to them. There is no inflation, so you don't get more stable than that. And we had a multi-decade low at 3.7. Now it's even lower. 3.5. And inflation, as far as they're concerned, is still in check. It's where it needs to be. So why are they going to cut interest rates at the end of the month? Because that's what they're going to do. The question is, are they going to admit that they're doing QE4? Now, we said be mindful that they are not going to call it quantitative easing 4. I don't know what they're going to call it, but they're going to say this is no longer an emergency monetary policy. This is normalization. This is the maturity of quantitative easing. We knew this was going to happen, blah, 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 blah. A bunch of BS, but that's what they're going to do. They're going to come out because they want to tell everybody that everything's under control. Everything's fine. These are the idiots who are playing the violin on the Titanic, okay? We hit the iceberg. Let's start playing the violin. All right. There will be much more to come on that. In-depth analysis and just whatever these people say, because Jay Powell is coming out, the chairman of the Federal Reserve, will be out this week. And I'm sure there will be others, members of the Federal Reserve, coming out this week. They were out last week in force to say everything's fine. You don't got to worry about it. Some people are, obviously a little bit more hawkish. Some are more dovish. Put the pedal to the metal. Do what you got to do to keep this thing going. But in a couple weeks, maybe even next week, is their blackout date because they have their meeting at the end of the month. So they're not allowed to talk or say anything before the first, I don't know, week or two before the meetings take place. So they want to make sure they get out in force and make sure everything is just A-okay. So let's continue to trust them because they've been doing such a fantastic job for the past 100 years. Hong Kong protests continue. I mean, I don't know if this is reassuring or scary. No surprise. But the politicians, I mean, they're just as stupid over there as they are here. We have the chief executive of Hong Kong, Carrie Lam, come out and say, protesters, you're not allowed to wear masks anymore. Young man, you can't do that. What do you think these people are going to do? They're going to wear masks. That is the exact thing you would expect. What's going through the minds of these politicians? You have people who are protesting for what, going on 4 months now? And now you say, all of a sudden, you can't wear masks? What do you think they're going to do? They're all going to put masks on. And that's what they did. They're stupid here. They're stupid there. U.S.-China trade talks. Hold your breath, folks. There's going to be a deal. There's going to be a deal. There could be a deal. Everything's great. We're in the final laps. There's going to be a signing ceremony. Everything's fantastic. You tired of this? I am. I'm sick and tired of it. I don't even want to report this. But China's coming over. They're going to have a conversation. Although I'm seeing some reports out of Bloomberg that the Vice Premier, Li He, who has been leading the delegations for the Chinese, has basically said, we're going to come, we're going to have a talk, it's going to be high level, but we're not going to cave in on some of these demands that the United States is saying that we have to give in on. One of them being, we're not going to give in on subsidizing our companies. And in all honesty, why should they? Why should they have to stop as this to be some sort of term of this great deal that we have been in the midst of for the past 2 years? Maybe they should say, well, you know what, United States, if you stop subsidizing your industries, we'll stop subsidizing ours. Interesting, isn't it? I mean, where do we get the nerve to tell another country to stop subsidizing their industries when we do that here? And we don't do it because China does it. We've been doing this for a very, very long time. We're bailing out the farmers who, through this trade war, it's literally bankrupted these people. We have U.S. Steel and others within the manufacturing sector. I mean, in the case of U.S. Steel, we talk about it here quite often. They've lost 70% of their market cap since this trade war began. That's hashtag not winning, okay? You lose 70% of your rear end, let me tell you, you ain't going to be happy, all right? This is just a continuation. This is a bunch of nonsense. I mean, maybe if we stop subsidizing big oil, we bailed out the banks 10 years ago to the tunes of trillions of dollars. I mean, why can't China do it? We did it. We're still doing it. I don't get where we get off telling other countries how to run their business, because we wouldn't tolerate it for a second, or at least we shouldn't. So this is just, to me, the hypocrisy, this thinking that we are the world's superpower, therefore we can throw all our weight around and tell everybody what to do, how to live their lives, which is the antithesis of our Constitution. So you square that circle for me and get back to me. So I am not anticipating a U.S.-China trade deal, even though all the idiots were out in full force last week. The president, Larry Kudlow, Peter Navarro, they all came out and said, well, there's a good chance there might be a trade deal. And the markets, of course, rallied on this. And they rallied on the fact that the jobs report was not as strong. Why? Because now the Federal Reserve might have to come in and step up to the plate and start printing money again. Why? They have a dual mandate. Full employment, stable prices. Check, check. So why they got to print money again? Why they got to cut interest rates again? I mean, we are living in the financial world of Oz. You can't make this stuff up. So, and another thing with these markets, I continue to watch a handful of people, really a couple people, I guess, on YouTube who are professional traders, and some of them you'll see on TV as well, making, their commentary. But these guys I follow, and I follow them because I think they do a pretty good job of calling balls and strikes. I mean, do they sometimes show their hand if they have a little bit of a bias? Sure, but they do a pretty good job of calling balls and strikes, so that's why I like listening to them. And they do a pretty good job with their analysis as far as I'm concerned. And a continuation we are in limbo land. I mean, you can make a case for this, for a bull market or for a breakout to the upside, or you can make a case for the bears and a breakdown. Now, you know my bias. You know where I stand. I think it's more likely that we go down than up, but if you continue to live in this financial world of Oz, it is quite possible, if not probable, that there is a breakout to the upside. If you have the Federal Reserve come in once again and they really go ballistic, I mean, the addicts on Wall Street might love it. And you could have new all-time highs, which we're really not that far away from, despite the fact that there has been a decent pullback over the past week, although there was a strong bounce back on Thursday and Friday, the 2 days that I wasn't here. So we got to monitor what takes place this week. There's a lot of news that is coming out. We have the continuation with the political scandals surrounding Donald Trump. We now have an alleged second whistleblower who is expected to file a formal complaint. I think at this point there has not been a formal complaint, although they are discussing what to do with the Inspector General Office of the Intelligence Community. So we're going to have to keep you posted on that. Donald Trump, I think, is egging this person on. Bring it on. Okay, that's what he wants to do. He wants to dig in deeper. That's his strategy, evidently. So we're going to see how that plays out for Donald Trump. This is the month of October. At the end of October, Halloween, trick or treat, we have Brexit. Is there going to be a Brexit or isn't there? We are going to find out. But it appears to me that Prime Minister Boris Johnson, despite the fact that he has not won a single vote in Parliament, especially not surrounding Brexit, he's making some of his counterparts in Europe and the European Union a little bit nervous. Is this guy as crazy as his hairdo? He might be. And so I think they're getting a little bit jittery because these people know that if there is a Brexit, it's not going to work out for anybody. So they want to play tough. Prime Minister Boris Johnson is coming in there playing tough. I'm leaving one way or the other. You're either with us or against us. Now let's see what you do. So this is going to be down to the wire. You have, this was even stated by, I believe, Governor Carney of the Bank of England, that the British pound is trading like an emerging market currency because of its volatility that is surrounding all of these headlines. Well, is there going to be a deal? Isn't there going to be a deal? So we're not going to know. We're not going to know until the end. It's going to be an 11th hour, 59th minute. And it's either going to be a deal or couldn't do it, and that's it. It's a coin toss. It's a coin toss. But I do say, if there is no deal, or if the EU pulls some sort of shenanigans, or if the British Parliament pulls some sort of shenanigans and tries to force another second referendum or something like that, or this thing gets delayed even further, I think it's incumbent upon the people of Great Britain to revolt. I mean that. I've said that months ago. Now this is going to be the second hard Brexit, or the second hard deadline regarding Brexit. If they don't leave, it's just a sham. So we'll keep you posted, but we got a few more weeks to go on that. And then we have a couple major corporations announcing some big layoffs. Hewlett-Packard, HP, has announced that they are expecting to lay off 9,000 employees in a quote-unquote restructuring. And another quote-unquote restructuring is also taking place at HSBC, one of the world's largest banks. They are expected to lay off about 10,000 employees in this first round. And I say first round because I anticipate HSBC, along with many, many, many other banks, will follow suit. HSBC, Hong Kong, Shanghai Banking Corporation, these guys, I can only imagine how much exposure they have to the Hong Kong markets, and in particular the Hong Kong real estate markets, which are the most overvalued markets in real estate in the world. So you think subprime was bad? Wait till this baby goes. You have HSBC go. That's like Lehman Brothers. I think they're like the 6th largest bank in the world by assets. And I'm sure they are levered to the hilt. They are riddled in scandal after scandal with money laundering. But, you know, you look under the rocks, under the sheets with all of these banks. I mean, it's all dry rot. I mean, money laundering, they commit crimes like it's their day job. Where do you think all the money comes from? Americans don't have it. They're living paycheck to paycheck. They don't have cash. They don't got it. It's it's the drug dealers that got the money. And you think I'm kidding? Look it up. Look it up. So those were some of the stories that broke over the weekend, some of the things that are going to continue to play out over the course of this week and over the course of this month. What has me most concerned continues to be the Federal Reserve in the overnight market. What happens politically with these whistleblowers is going to happen. Like I said, we took the time on this podcast, several podcasts, to read what has been released by government agencies, by the White House, not putting any speculation out there. These are the facts. This is what we know. Speculation, you want speculation, turn on MSNBC, turn on Fox, turn on CNN. You just want to understand the facts as they stand, find the documents, or listen to those podcasts, because there's enough speculation to go around. It's conspiracy theories. It's the biggest coup ever concocted. I mean, I don't know. I don't know. So I'm not going to come out here and say that. I don't know. This is not a podcast that goes down all of these rabbit holes and goes after one conspiracy theory after the next. I can assure you that if you are into that, you can find many, many podcasts that talk about conspiracy theories and people going after Donald Trump. It's a deep state coup. You will have no shortage of those types of podcasts. But if you want a podcast that is just going to release and discuss what has been released officially, then you follow us here at the Kapital News. Speculation does nobody good. All it's going to do is further divide the country, because if you're on the left, you don't want Donald Trump in there. If you're on the right, you're going to defend him. If you love Donald Trump, you're really going to defend him, and you're going to go down all of these rabbit holes with all of these conspiracy theories. Now, is it possible that some of these are correct? Maybe, but we don't know. And until that information comes out, until there's formal investigations, until somebody has their day in court, all this is Donald Trump, Rudy Giuliani, and a whole host of other people trying to defend the president, which is their right. But these are the types of stories that cloud people's judgment, and it makes it all about politics as opposed to the truth, and that's a big problem. So stay tuned for the week ahead, because I think it's going to be quite the doozy. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.